Welcome to the channel. This is Reliable Already. Today, just coming with some pre-market analysis. Gonna go over the NQ, gonna go over oil, gonna go over natural gas, and a couple positions, and then we'll wrap this up before the pre-market starts. But before we go over any analysis, I'm not a licensed financial advisor. Simply just sharing my opinion with you guys. This is not investment advice. Uh, but that being said, I think that's good information. So, yeah, I was just on AAL right here. But let's go over to the NQ. Let me make sure my voice is everything good there. Let me send out one little message real quick, and then uh, we'll get this underway. Okay, so here we have the NQ. Now I basically just have a clean chart right here, but as I think the last live stream was on Friday, the 24th. I stated that as long as this can stay positive, then I think that volume can come into the market. Yesterday, or yeah, yesterday it would have been. This would have been Monday. We get a nice shape bottom, and on the actual Nasdaq composite it shows a gap up, but in the futures it showed a shape bottom, and it looked like it was decent. Now, looking more into this, this is a classic neckline break. You have a confirmed higher low, two nice green engulfing candles breaking over top of this neckline. That is what I'm looking at. So as soon as you see this, it's like, okay, you're expecting this to end up being a bull flag, and you're very interested down at this previous top, but it doesn't give you that opportunity, and now um, we are getting a positive break. So where do we get the positive break? On this candle right here. So you can buy the consolidation off this previous high. It never reaches there. So had you put orders just off of this wick top right here, it wouldn't have got filled. But looking even back over to yesterday, I believe here is Monday. So this was the end of Friday, and then you get Sunday. So you have a lot of consolidation. Now, same thing. Now, Uh, when do you get your positive break? You actually get your positive break on Friday, which is crazy as it seems because Friday was a nice red day consolidation, and now we took out these wick tops right here. Nice little 1, 2, 3 bull flag, and then you end up taking that wick high out. Consolidates. Where do we consolidate to? Right to the previous tops. Look at that, guys. That's just gorgeous right there. And how does it react? This gives you a neckline break again. Look at these wick. And it gives you the neckline break with a full green engulfing candle. Gives you no consolidation dip. And we have a leg up. So now, where are we pulling back into in this range? We're basically right at the original entry. And it gives you another positive break right here. So nice little stair step action going on right here. So I would say that I would expect continuation going on into the day. The Nasdaq is going to gap up. If we go look at the IXIC, the Nasdaq Composite, you can see that more than likely we're going to get a gap up into this range. Now you can also see that we have this gnarly gap right here. This is the Friday's gap down, the consolidation. Now you can see without the futures, the future gives you the positive break after hours. So it was really a matter of, did you like this neckline break right here? And I did buy into the Nasdaq off of this break and consolidation off this previous high. Now, when it looked like this, it was like, oh, this is going to give this up. We're not going to get a positive break. But then it ended with a very strong 30 minutes of the day. Tuesday's trading day gives you the gap up, which is exactly what you're looking for. You're looking for a retrace down to this gap. But based off the Nasdaq futures, it's not really going to give you that opportunity. Uh, at this moment in time, of course. I mean, this is very short term. Um, but if I had to say in a long term retrospect that, as long as you're positive right here, you're expecting volume to come in at any given point. It's just a matter of when that opportunity comes. So that's my thoughts on the Nasdaq. In all honesty, I would be careful with, this gap right here is probably getting filled today, but is it going to have the strength to push up to this gap right here, meeting in with the moving average? And it actually has an overhanging resistance gap as well. So that's going to be very interesting because if we do have the strength to push up to this gap, you're basically saying, hey, we're going to push through this moving average. And how many times have I showed you guys? Goes on a run, ends up building a U shape. Well, if we go back and look at the Nasdaq futures, because that shows it a little bit better. So here's the Nasdaq futures because this is gap free. Goes on a run, builds a U shape. Now, if we take out that gap price, you're going to be looking at a price right here that's going to look like a nice U shape right there. So going back to this 15-minute chart, because this is going to show us, as long as you're positive on this 15-minute, look, you just took out the previous high with a nice green and golden candle. And what are we retesting? If I just mark this wick top right here, you guys can see all I did was mark this wick top, and boom, you put a couple wicks into it. Now this candle, this current candle that we're on, is turning green. Is it gonna have the strength to take out this high right here? Which, if I pull this across, it's tough to say, but this has gotten pretty good contact as well. So a pretty interesting level that's at for sure. Okay, so moving forward, we'll go over to oil, and this is the main reason why I wanted to do a live stream pre-market right here because I think oil's chart is very interesting. And if you guys have tuned into the live streams at all, you guys know that I talk about oil quite a bit. Now let's just mark out some technical levels because I don't know why my chart is done, but this is a gnarly little downtrend that we're in. There's probably 100 different ways that you can put this, but I think this is the one that makes most sense to me. You got 1, 2, 3 points of contact. Now on that third point of contact, let's focus in a little bit more on that. You have a nice double top that comes in, and then you have a shoulder that comes in as well, kind of meeting in with this left side. But at the same time, you guys are like, oh, why would you want to invest into oil right off of that downtrend? Why would you want to think about oil into that downtrend? Nice, beautiful looking uptrend meeting in with it as well. So I'll make it a little bit shorter right there. Now, more technical levels. The monthly. This is what is just extraordinary to me. For anybody watching this for the first time, I have a lot of extreme measures of, I mean, if I was looking at oil back here, I would look at this as a channel. And now we've actually confirmed broke through that channel, right? And that doesn't mean that it's investable, but also looking at oil, and if you guys have seen me talk about a neckline trade, this is a classic left leg, builds a neckline. We got a right bottom. Now this was just a crazy time with oil right here. This was back in COVID when it went to, you could buy it for pennies on the dollar. But I look at this as a right bottom, and now we actually do get an extended right leg. This wick top pretty much goes up. It does exceed these highs, which is my original left leg neckline, double bottom, extended right leg. Now where's my neckline at? There's my neckline right there. What are we putting wicks into? Boom, 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 boom. 4 consecutive months putting a wick into this neckline. Now that doesn't mean that this is just a guaranteed play, a home run play. But then when you go to another metric, goes on a run, builds a U shape, it's been trading sideways for a long time. Can you see the early signs now? If we were to break over 80, what would an 80 break look like? I'm just going to mark 80, 80 flat, and see what that looks like. And we'll move it left of the chart. So we'll just put 80 flat right there. And you can see if oil is able to get over 80, one, it's through the downtrend. Two, I would expect oil to catch a bid breaking this downtrend and eventually break through 83. Now, if we break over 83, this is going to start giving you that U-shaped look. Goes on a run. That is a magnificent run. Builds a U shape. off of the neckline. There's so many different variables that go into this oil chart, and all in all, here's one more retrospect. You're like, dude, oil's up here way extended. You're never gonna get that true extension, because if I take this left leg neckline right here, just on this first left leg right there, these are my extension points. Now this first extension meeting in pretty much with this previous high, or with the all-time high price. But is it possible to get a full extension on oil? And someone would be like, oh, you're never going to see oil up at 300. I promise you, you're never going to see oil up at 300. That's what one would say. Well, let's go back. We're on a month chart, so every candle right here represents a month. Keep that in mind. I'm just going to take this. So at one point in time, back in 1990, oil set a new all-time high price up at $41. And back then in 1990, you could have said oil will never touch 150. You are out of your mind. Let's take a retracement from this top to this bottom right here. Now, you could have been back here. Let's go back over here. You could have been, all you had on the chart was this right here. Let's just pretend. You would have said, oil is never going to give you that 140 extension. Never going to give you that 140 extension. Are you out of your mind? Would have been so easy to say that. And what happens? We get almost direct correlation sell-off right off that full extension. Boom! Slammed. Just slammed. Now I know that might seem crazy to some of y'all. Like a lot of this might seem a little crazy, but at the end of the day, these oil earnings have been coming out left and right. Axial Petroleum, Corporation. I always struggle saying that. You know, oil time and time again throughout this earnings season, one after another, has not failed to disappoint me. The one was Devon Energy, where they decreased the dividends, but that was about it. And I still liked the Devon Energy earnings report, which was crazy to say. But all these oil companies, they're returning a lot of value to shareholders. They're buying back shares. They're increasing their dividends. They're paying off a lot of debt. They're putting up great margins, gross and net. It's it's crazy to say that some of these oil plays are negative on the year with some of the earnings that they put up in the fourth quarter. And now you got the oil index giving you this type of setup on top of that. You know, it's going to be interesting to see the way that oil pans out the rest of this year, but this is a very interesting setup. Now, going over to a 15-minute chart and kind of looking more at a metric, boom, boom. Clear double top, gets rejected originally, but it's basically stood on this uptrend right here for the most part. Now, this uptrend also is a nice parallel channel. Now, oil is on a I mean, just on a tear right now. Full green engulfing candle, looking bullish as ever. I would expect some rejection off of this, in all honesty. But this double top comes in, and we've actually exceeded those highs. Look at what happens. You have that little false breakout. You have the consolidation bull flag off of this break of these wicks. There's your breakout. What do we retrace to? We retrace to the breakout. You guys see that? And this is how it's followed over the last hour. This is the last hour. In the last hour, oil is already up almost a whole percentage, which that's no slouch of a move for an index. Now you can already see live, as you're seeing this live firsthand, you're seeing this wick into the top end of this channel. Now, is this a perfectly set channel? No. I wouldn't say it's a perfectly set channel, but this channel makes sense to me, and I don't need it to be set perfect. So that's my thoughts on oil. I think oil is very bullish. Now, where is your positive break if you were looking for a break? Let's say you were trading this index. You're getting closer to that positive. It's hovering, hovering, hovering. You're hovering negative through all of this right here. Now, if you think you're going to get that positive break, this is a nice higher low. followed with a nice green engulfing candle that exceeds the high. Now, when you exceed this high, boom, right on this green engulfing candle right here, you get your positive break. You guys can see that. You go positive down here. Here's your consolidation dip. Now, where does this bottom wick end up going to? I'm just going to mark. I'm focused on this wick right there. Boom. You see how it taps it? Boom, boom, boom. Now you have one little false breakout right here and a couple wicks that go over it, but this is, in a sense, is the previous high. And it's a whole quarter number, 75, 75, and that's pretty much where we retrace to. And this is the reaction that we've gotten from this since. Nothing but a bull. So taking that positive break, we said in the last hour that oil is, and now it's trying to break through the top end of this channel, which is why it's probably not set correct. You know, who knows? Maybe it just blasts right through it. But end of the day, if you were taking a positive break on an index, 2% move within this entire day. So oil is definitely going to be on watch today. And just another look at this breakout right there. You can see here's that small short-term channel that we're trading in, which is why, you know, it could just blast right through it. But now we're meeting in with the downtrend, and my downtrend got moved off. Not meeting in with the downtrend, but you know, if it got there today, I would expect a little bit of resistance, a little bit of pullback to these previous highs back in the 76s, maybe even just 77 flat. Um, but a very interesting setup for oil, and I think that all oil plays need to be on watch. And I can go over a couple notable ones, but we're gonna go uh, move off from the oil talk, and we are gonna go over to natural gas. Because natural gas has been on just an absolute tear. Now you'd say, absolute tear, what are you talking about? It's near its lows on the year. But off of these bottoms, you know, this might not look like much. But from the bottom wick to current price, natural gas, which is something that I've been talking about for I'd say about 3 or 4 weeks, is up 35% in the last week. Uh, yeah, when there's volatility, when there's volume coming in like this, and I'll show you Boyle. Boyle is a really good example because the Bloomberg natural gas leveraged ETF. You know, same type of story right here, but look at this volume that's coming into this. On Wednesday of last week, it set record high volume at 92 million. Now, when there's volume, there is going to be volatility. When there's volatility, there is going to be opportunities to take advantage of. And that, in a whole, is just hits natural gas on a T for the year because it got blasted. I mean, natural gas got blasted from December through January. Even into early February, this was blasted. But you can see where there's volatility, there is opportunity. The volatility has been since early December, and now it's finally starting to pan out, but you can see the continued increase in volume for natural gas. So I mean, yeah, I mean, you can do your own due diligence on natural gas. I know there's a lot of supply and demand that goes into natural gas in terms of usage, and you know that goes into the supply when supply and demand is figured. That also goes into the production. Now, I guess that's part of the supply, but the production for some of these oil companies that manage or produce natural gas. Um, it's interesting to see that natural gas is up 32% over the last 2 weeks, and matching that up with Boyle. Boyle off of these lows is up 50%. When something's up 50%, there is, and with the last four candles exceeding 50 million in all four of them, and 92, 87, 67, 88 million. It's a lot of volume coming into this. So, yeah, that is why it is on watch, but more on a longer term aspect of things. From where we're at, clear downtrend, nice parallel descending channel since existence in 2011, and it puts a wick almost directly correlating to the bottom end of this channel. This is why I'm saying there's opportunity. Now, does that mean that natural gas is just gonna rip up to the top end of the channel? No, no. But I don't think it's out of the question to think that, hey, this previous low meeting up with this gap fill is not out of the question for a long-term play. Now, that doesn't mean that you're not going to get a new low, but that gap fill represents a 174% move. That is no slouch of a move. So, where there's smoke, there is fire. If, let's say, we're meeting in at this downtrend and we retest the bottom end of this channel, I mean, if we were to get down here, oil could rip another 50% to the downside, and that could happen in a snap of fingers. So, if you're able to manage and able to stay on top of it, there's opportunity there. So there's my talk on natural gas, and we can go into a 15-minute chart real quick and we can talk about it. But where's your positive break right here? Boom, right there. 470. Now I did dip into a little bit of boil. Nothing crazy because I know that there is risk. But when you get a positive break with a nice green engulfing candle and then you get a wick that retests that same level and it closes with a higher low, it was too good to pass up on. And that's why I dipped into a little bit more boil down at that range. But I think all in all, my cost basis on boil is around that 670. Just, I mean, there was opportunities where you get a positive break on a full green engulfing candle back at 6 that we took. And, I mean, we've tried not to make this a large position, but having a position in place was important for me, especially as much as I talked about it. If I talk about it, I'm not blowing smoke here, guys. I will take an entry on any play that I feel there is value if the opportunity is there. So I'll leave it at that, and we're going to talk about a couple tickers here before we close this out for the day. And just right off the top, just a new entry that I had yesterday. I mean, this is a prime example of something that, uh, I mean, I just took this trade yesterday. So we've had this channel identified. Now up here, direct correlation up at the top end of this channel on the earnings day. This was a clear profit take, and not a good-looking candle off the earnings. It consolidates sideways, but then you get a negative break. Now you're saying to yourself probably, oh, excuse me. Now you're saying to yourself probably, this doesn't even pass your rules. Why would you take a trade on this? I agree. I would not take a trade on this. But when opportunity presents itself, I'm going to take it. 1, 2, 3 points of contact. You're expecting that fourth point of contact to have some sort of action. Now, that fourth point of contact right there, boom. You never get it down here. You get it right here. Now, why does it show this wick top? Here's this gap fill right there. Now, here was the other one that we identified. Boom, direct correlation gets a nice little pop. And this is no slouch of a move. This goes from mid 46 over 50 in retesting, gets rejected. But now we actually get direct correlation with the channel and it fills this gap. And early in the day, so let's look at when we get this positive break right here. You can see this is Friday, this is Monday. It closes Friday above your neckline. We didn't take the trade Friday. You get the gap up, fills the gap on the first candle. Boom, entries in. Just dab into the position and see what it looks like. And we already identified our first out is that we're going to be getting our first out on this gap. We got our first out. We actually extend a little bit higher. Now, to some people, they'd be like, dang, why did I freaking cut off that gap? It looks good. It's going to extend. But who knows? Maybe this opens down. It looks like it's going to open up. Here's your pre-market price. If this takes out this high right here, I would expect a little bit more extension. Uh, uh, Continuation is a better way to put that. But, this could be looked at as some sort of downtrend. If I pulled this all the ways across right here, this is probably more what the downtrend is like. and this actually goes up to the top end of the channel. So it's going to have some resistance. Am I going to cut into this downtrend? Probably, because I'm expecting some sort of resistance. But if a price pulls back to this trend line, we're going to respect this trend line with anything that we recycle out. And I call that a reload. If you trim on something and you buy it back in at a lower price, it might even be a higher price. I call it a reload. So that was a new position. A couple other notable ones that I'm sitting in right now. AM has been a very interesting play. Uh, One that I am holding. It looks like it's going to get a nice pre-market little boost right here. And is this going to have the strength to push for a new high? It's tough to say now. You're saying to yourself probably, why do you have your channel set like this? Well, we go to a 15-minute chart and we look at this channel that we have set. Pretty parallel channel. And look, we've never broken underneath that. Great opportunity here at 5 as it retests the previous high. So we have our retest of the previous high there. Now it actually trades below that. Now what's our low right here? It comes in to retest these previous wick highs right here before we actually get a pop. But this 5 level was an interesting level that traded around for a while. And then it gave us a good opportunity on a positive break. Boom, right there. Now where'd we take the trade? Took the trade right here. Now we took the trade earlier in the day as well because we thought this looked good. Breaking over a neckline. Rejects a little bit. Where's your stop? Below this wick. If it gives that up, it's probably given up the uptrend and we don't like it anymore. And we reloaded even more shares right here and we got rewarded at the end of the day. Now, is it going to continue up for this gap fill? Now, just for that gap insinuates another 16% move. From the entry, I think I have a 518 cost. So here's your 518. It's about a 9% in the money. And that's just an example of taking a positive break, but where is your actual positive break on this? Boom, right there on this candle as we're breaking 525. So pretty interesting look right there with AM. BTI has been an interesting setup. On a 15-minute chart, did not have a strong close, but on a daily chart, you can see that it is very, very close to a positive break. Now, this is not a clean run. Leaves a few gaps on the way. In most particular, the gaps are down here near the trend line. So, any profit takes that we're looking to take, we're looking to trim off of this gap right here, right near a 40 flat. And if this projects and comes back down to these mid 30s, we will gladly reload BTI. Um, you know, I I could go over a million plays, but I would say the one play that I'm most interested at the moment. This is not like a financially sound company that I think is just going to be a hold for the long term type of play. Maybe it is. I don't know. But this setup with Zim right here is very interesting. On the year. So this is year 2022 right here, near all-time highs. This is March of 2022. In this year, they paid out $28 in dividends, and the current price is $24.50. Think about that for a second. They paid over 100% in dividends. And look at this cup, this little U shape right there, and then a retest of the uptrend. Where is your uptrend? Boom, retest the uptrend, retest the uptrend. Now, where is our entry? Our entry's at 22.25 on Thursday. Maybe it was Friday on the consolidation. Yeah, I think it was Friday. But let's go to this because this is the late entry right here. Now you can see where's Friday's trading day. So here's Friday. Now 1. Thursday breaks over top of this wick. 2. The consolidation is still positive, way in the money, off your moving average. Boom, reload 22.50 and had an order in off 22.25. Where is 22.25? Your previous high. It's just simply your previous high. That doesn't get loaded, but we took profits near this, pretty much right there, I would say. Somewhere in there, I'm sure that's why the red lines are. But this is also getting a good extension. So looking back at the daily chart, breaking over top of this wick high, setting a new highs. You have a clear out, one here at 25.65, which we will be cutting, but I think that this looks good for continuation. If I'm lucky enough, one day I might get this gap fill at 47. Now we're talking about $22 entry, 111% potential move. That is enticing to me, especially with that setup. And you have a little bit of time before this earnings report as well. So that was an interesting play. Now that I can see it, I would say T row, very interesting. Kind of the same setup as that AA, a cola corporation, where you have this 3 points of contact. It doesn't get down there this time, but this time it actually does. The difference with T row is it gaps up and it never came down to fill that gap. Had it came down to 110, I think yesterday I would have probably had a position in T row. But this gives me that feel like, it's going to test probably up into this 115, these previous wicks right here, and then retest this uptrend. Now, if it fills this gap off this uptrend, I might dabble into it. I think this is a fundamentally sound company. They invest their money very well. They're buying back a bunch of shares, not much debt, good margins, good net margins. This is one play that I'm going to be looking at for a long play. Another one that I'm interested in for a long play is 3M, just because it's been following this fairly parallel channel since 2016, and if you want to be more technical, 2018. And we are near the bottom end of this channel, resting at previous pretty decent support, but you have downside risk, I would say, to those previous highs. 100 flat down the upper 90s is pretty good valuation for 3M. I don't calculate the greatest valuation, but in the 80s. 3M in the 80s is outstanding value in my opinion. Boring company, yes, but definitely one that we're going to be watching. Now, real quick, a couple earnings plays that I was sitting in. MRVI. Initial cuts right off the open was necessary here. But now we've retraced down, and it's trying to hold this 14 level, which has been a very interesting level for a while. Is one that I would keep on watch right there. Earnings today, this is one that we are going to be looking at. The earnings report doesn't look like it's out, but that's going to be one. Oh, what else do we got? IIPR. We'll talk about that real quick. In the marijuana industry, but all they do is lease the land for people to use warehouses to grow. They came out with earnings and, set record profit, record revenue, and compounding those two metrics quarter in and quarter out. This is a REIT. 90% of profits go to dividends, and if they're growing in revenue, growing in profit, that dividend is going to continue to grow and grow and grow. Unless they continue to issue shares, which I believe through the year 2026 they're eligible to issue. Or no, it was the end of 2024. They're eligible to. They are required to issue the rest of their senior note of another $6.2 million worth of stock. So there is going to be continued dilution, but I think sell off from near 300 down to 82 for a REIT that's growing quarter in and quarter out. This is a reasonable area. Now, if we do get continuation, who knows where they open up off of the earnings report, but $72 gap is going to be a very interesting level for me. 74 is actually where the gap's at. And you have a $60 gap down here, so I'm not counting this out of the equation that, this could come down to 60. But I think that the opportunity down at 60 is a very good opportunity. And that is going to complete the live stream. I hope you guys learned something. I hope you guys enjoyed the video. And we will see you guys on the next